Hello and welcome. This week, all eyes were fixed on the Chancellor's autumn statement. This was a chance for the government to outline its tax and spending decisions for the next year and update on the Office for Budget Responsibility's economic forecasts. For our investment team, the focus was on gaining an insight into the OBR's confidence around the health of the domestic UK economy. And the statement outlined how the UK economy has proven to be more resilient to the shocks of the pandemic and the energy crisis than previously anticipated. And the OBR expects GDP will rise this year by 0.6%, beating the previous forecast of a 0.2% dip. However, more notable for us is the forecast of slowing GDP in the years ahead. The expectation is for growth of 0.7% in 2024 and 1.4% in 2025. That's a stark comparison to the OBR's March predictions of a rebound of 1.8% in 2024 and 2.5% in 2025. And while there's no indications here of a coming recession in the UK, it does shine a light on the fragility of the forecasted growth. Now, from an investor's perspective, it's always worth remembering that most of the constituents of the FTSE 100, our preeminent equity index, are internationally focused, with up to 3/4 of the revenue of listed companies estimated to come from overseas. And as such, the index tends to move more in tandem with global macroeconomic events than it does with domestic concerns. Also announced in the statement this week were inflation forecasts, with price rises now expected to come back in line with the Bank of England's official 2% target a year later than previously forecast in 2025. Now, having previously estimated an average inflation rate of 0.5% next year, this will instead sit around 2.8% next year in the OBR forecast. That ongoing battle with high inflation is something that we've covered throughout this year, with the consensus that we're now past the worst in terms of those persistent price rises. However, also this week, Bank of England Governor Andrew Bailey suggested that markets are underestimating the risks of more persistent inflation. And this is something that we'll be watching very closely ahead of the Bank of England's Monetary Policy Committee meeting in December. Be sure to read our latest blog on the new flexibilities for ISAs announced in the autumn statement on our Nutmegonomics page on the website and the app as we keep you updated on the latest changes. Thanks for watching.